So I was reading an article this morning about a 15 versus 30-year mortgage and what we need to know. When you're applying for a home loan, you face the option of getting a 15 or a 30-year mortgage. It can be a daunting decision, and thinking about something 15 or 30 years down the road is overwhelming. So there are pros and cons to both options, which we'll talk about here in a second. The basics of a 15-year mortgage include the fact that it's going to be paid off faster and will probably have a lower interest rate. However, with a 30-year mortgage, you're going to have lower monthly payments. So which one is right for you? With a 15-year mortgage, you have a monthly payment and fixed interest rate for the life of the loan, as this is the case with a 30-year mortgage. It's also an alternative to a 30-year mortgage, although it's the more conventional option. With a 15-year mortgage, if you're more willing to deal with the possibility of downsides, it can ultimately save you a lot of money over the long term. The upsides of a 15-year mortgage: a 15-year mortgage is cheaper in the long run than a 30-year mortgage. The cost of the mortgage is based on the annual interest rate, and you're only borrowing money for half as long with this option. Short-term loans are cheaper, and they're viewed as less risky by a lot of lenders, so they may offer a lower interest rate. Sometimes the rate can be different from anywhere from a quarter point to an entire point when compared to a 30-year option. The FHA charges lower mortgage insurance premiums on 15-year loans. Some financial analysts and planners feel like a 15-year mortgage is in the form of forced savings. Basically, you're investing in a house instead of something like the stock market, but the house is more likely to go up in a value or appreciate. What are the downsides to a 15-year mortgage? You're going to have a higher monthly payment when compared to a 30-year mortgage because you're paying off the entire loan in half the time. You may not be able to afford this. If your aim is to get a 15-year mortgage, you may ultimately be able to afford less house because of the payments. If you're making a higher house payment each month, you're going to have less liquidity and cash reserves and less money to put towards savings and other investments. So what are the up and downsides of a 30-year mortgage? The upsides is your monthly payments are lower. This is essentially the biggest upside of a 30-year mortgage. You may have more flexibility in your budget with lower payments simply because you're stretching your payments out over a longer period of time. You have some flexibility in how you repay the 30-year loan. For example, if the opportunity arises, you can pay more, but you don't have to. You may qualify for a more expensive home, so your home may grow more with the needs of your family over time. Tax laws let you deduct mortgage interest rate from your taxes. When you first get a home loan, most of your payments go towards interest, so that can be a substantial deduction. Since the payments are smaller, it's easier to qualify for a 30-year mortgage. You have more money each month to put towards other goals, including savings and investing. The cons of a 30-year mortgage include lenders tend to charge a higher interest rate on the 30-year mortgage because they're spreading their risk of you not repaying over a longer period of time. You're going to pay much more interest over the life of your loan. With a 30-year loan, you're building equity in your home at a much slower pace. And with a 30-year loan, you're putting yourself more at risk of borrowing more than you can really afford. So overall, you can see the pros and cons of each are significant, and there's no right answer to which is the better option. It depends on your financial situation and your goals and priorities for the future. I hope this helps, and let me know in the comments below. Be sure to like and subscribe my YouTube channel, and look forward to seeing you on the next video.